What's going on, guys? It's Kyle. Welcome to the Stock Goat YouTube channel. In today's video, we're going to be covering the overall market today because it is a really red day in the market, and that is because CPI inflation data has came out. And we're also going to be taking a look at a Morgan Stanley article that they put out on a potential market crash. So we're going to be reviewing these things, and I'm going to be showing you guys what to look for to keep yourself from getting hit hard by a market crash. We need to be checking these companies' valuations. I'm going to be showing you companies that are crazy overvalued right now and other companies that are crazy undervalued right now and what you should be buying to protect yourself. So only if you feel this video gives you a better insight on the stock market or the direction that it's headed, be sure to subscribe to the channel. I'll be keeping you updated daily with all the growth stocks and spec plays. There's gonna be a lot of great information coming out. You don't want to miss it. Let's get into the video. All right, guys, we're going to go over the bar charts and just show you guys today, the market is really red. As you can see, um, these types of numbers are not supposed to be happening. A company's not supposed to lose 1/10 or a quarter or a half of its market value in one day. And that is just a heavy traded retail stock. I don't recommend to be buying those because the volatility on these are insane. But if we scroll down, there's tons and tons of nines, eights, sevens, six, fives, fours. These are really big drops to happen on one day. And if it's happening with no bad news on the company at all, it's definitely a buying opportunity because sometimes a stock's price does not reflect a company's performance like we're seeing today because that inflation data came out. If we go over to Yahoo Finance, we can look at the top right here. The S&P 500, Dow, NASDAQ, and Russell 2000 is getting hit hard. But we can see right here the Russell 2000 is getting hit the hardest. Of course, that is because this is the most heavy traded, for retail. Retail goes after those small, low float, tiny cap stocks. And this is why it's getting hit the hardest because retail has the biggest paper hands, compared to like Wall Street. So that's why Russell 2000 is getting hit the hardest. Stock market news live update. Stocks turn lower after hitting intraday records amid earnings inflation data. Inflation was also back in focus, and new data showed consumer prices surged by the most since 2008 in June. So, guys, inflation is at the highest level in almost 15 years. But the good news is that the media really tried to hammer down today and scare retail investors. They went with that headline of CPI was up 5.4%, but that was year over year. The month to month, CPI data was 0.09%. Right here we can see, the price index rose 0.9% in June. So that's the good news. It's not jumping 5.4% in 1 month. It was about 0.9%. Of course, the media doesn't care about retail traders. Their goal is to scare people and create headlines, to create, advertisement. And for anyone new to the market, you need to know retail traders as of July 9th, 3 days ago, 4 days ago, retail traders make up 25% of the stock market. So if you're wondering why a heavy retail traded stock is dropping 5-10%, that's because there's a lot of paper handlers out of that 25%. So that is what you need to understand. We make up 25% of the stock market. That's why the volatility on these growth and early SPAC stocks is absolutely insane. And you see pretty much 99% of SPAC stocks coming down back under $15. Regardless of the valuation, over 90% of SPAC stocks have came back down under $15, and that is the truth. Even if you pick the most solid company, the most solid SPAC stock, guys, they all come down, and that's just the market that we're in right now. So here's a very bearish article that Morgan Stanley put out. The S&P 500 is vulnerable to a correction of up to 15% with tech stock valuations at dot-com bubble levels, Morgan Stanley says. So, of course, this is a great time for Morgan Stanley to put this article out today when the inflation data comes out. Once again, another fear tactic. But as long as you know what companies you're investing in and your company is not in a dot-com bubble level, you should be fine. You should see, of course, a small pullback if the S&P 500 corrects 15%, but your company may not be, at a market valuation that ridiculous. And the thing is, a lot of these S&P 500 companies are companies that retail traders don't necessarily touch. This is more of a hedge fund, Wall Street, big money problem because they're the ones running up the S&P 500, to crazy highs. Companies like, Adobe, Aflac, Amazon, AMD, Best Buy, BlackRock, a lot of these companies retail traders aren't necessarily in. CarMax, Caterpillar, Clorox, Costco, uh, John Deere. I'm pretty sure a lot of people watching this YouTube channel right now are not buying these stocks in the S&P 500. Dollar Tree, eBay, EA Sports, Etsy, Facebook. A lot of these are, more of the big money stocks, they're holding, to play it safe. And I'm more into that, growth stocks with ridiculous low valuations that I know in the future are going to rise up after multiple earnings. So I'm just going to have to go along in this type of market. I'm going to hold on to my positions. We're going to take a look at some positions I see really, really undervalued and some I see ridiculous overvalued in that .com, price, range. That this is true. There is multiple companies, especially IPOs, in that .com bubble area. Let's go over to Yahoo Finance and let's just look at some IPOs real quick. I keep bringing up the same IPOs usually, but this is just true, guys. Let's take a look at Snowflake. This company IPO, let's see if they're in a .com, price area that could potentially lead to, a massive correction. This company right now, Snowflake, is trading at a near $80 billion valuation. I can tell you right now that, their revenue, and remember, revenue is one of the most important things in the stock market. A revenue is what makes the money. It's what pays the employees. This is the key to valuing a company first thing. That's the first thing you want to look at before you look at margins, EBITDA, growth. We want to look at the revenue. And I can tell you right now, they're projected to do around $1 billion in revenue. So people are saying they're willing to pay 80 times their sales right now. 80 times their sales. Remember that number before we look at other companies, okay? So even though they have good growth, over, 50%, that's still very, very pricey. And that is, .com bubble, price action to me, guys. And right now, Wall Street has 20 analysts covering this stock. Okay, it only has 5% upside, which is good. So these guys aren't going over crazy manipulation in this market trying to run this stock up. So they got it, don't move anymore. This is a good price range, which is still very, very high in my opinion. But as you can see, these IPOs get a lot of coverage, and that's what I don't like compared to the SPAC stocks. They don't give the SPAC stocks any coverage like this at all. Let's look at another company right here, which is Lemonade with $5.6 billion market cap. This is another company that did go the IPO route and is trading at a pretty high valuation when you look at their revenue real quick. If you go to Lemonade, revenue, they're doing about, we'll give them 120 million, for the next year. Okay, we'll just bump them up and say, they get a little bit of a 20 to 30% increase. So it's not guaranteed yet, but so we'll give them a 5.7 billion market cap divided by 120 million. This is trading at nearly 47 to 48 times sales. Okay, so we just looked at Snowflake. This is an IPO trading at 80 times sales. Lemonade is trading at nearly 50 times sales. So are you willing to pay 50 and 80 times sales, to purchase this stock in these companies? Are you willing to do that? Ask yourself that before you purchase these IPOs. So these are insane valuations, guys. We'll take a look at another company that I believe went IPO back in the day. This is Cloudflare. Cloudflare right now is trading at a 33 billion market cap. And it says they're doing about 431 million in revenue. We'll just give them 500 million revenue right now to just play it safe. So we'll go with the 33 billion divided by 500 million. And this company is trading at a 66 valuation right now, guys. This is insane. Look at these IPO stocks that we're looking at right now. This is what Morgan Stanley is talking about with these dot-com bubble valuations. Listen to me, guys. 80 times sales, 50 times sales. Let me look back real quick. 66 times sales. Do you see these valuations? 50, 60, 70, 80. This is what they're talking about. But I'm telling you, a lot of these stocks that have ran up ridiculously, retail investors are in a lot of these SPAC stocks that are undervalued. And we'll take a look at tip ranks just to see, what their word is on Cloudflare right now. And Cloudflare, okay, they got it about a 7% downside. So they got all these IPOs at a high valuation. Luckily, they're not giving them a lot more upside right now. But let's take a look at some other companies right now. SoFi Technologies is now trading under a 13 billion market cap. What is the key to this stock right now? What is the key? It is a SPAC stock. What does a SPAC stock have anything to do with company fundamentals and valuations compared to IPOs? Absolutely nothing. It's a fear tactic they're using, guys. It's a fear tactic to get retail traders, like I said, 25% of the market to just keep selling and selling and selling. Guys, 90% of these SPACs are under $15 right now. This is one that is, kind of holding its ground. I think it finally touched like 1580 today, but listen, a 12.8 billion market cap. I can tell you right now that SoFi is projected to do $980 million in revenue. So what does that tell us? We're getting a 13x valuation on a growth stock. This stock actually has more growth than all of those companies that we just went over. So it has more growth and it's trading at, guys, this is like 5, 6, 7 times less than these other companies, a 13x. So you're willing to pay 13 times sales to get your hands on the SoFi stock right now. So what I'm seeing is this scare tactic, this is not having anything to do with the SoFi stock. And if it does affect the SoFi stock and sells off even more, guys, you're getting ridiculous market valuation. You're getting under 10 times. Are you willing to pay 50 times for Lemonade, 70 times for Cloudflare, 80 times for Snowflake? Look at these IPOs, then look at these specs. We'll cover another one real quick. We'll cover another company right now, which is EightPoint. This just merged, guys. It was about $12 around the merger, and it sold off, of course, because that's what these SPAC stocks do. We're seeing it with 95% of the SPAC stocks. I can tell you right now that the market cap on EightPoint is $2 billion after the deal completed, okay? It's about $2 billion. EightPoint is the largest independent software vendor of software as a system solutions to migrate, manage, and protect data in the Microsoft 365 platform. So guys, they are a big customer for the Microsoft 365 platform, and the Microsoft 365 platform is growing at a ridiculous rate. EightPoint is projecting, 7 million market share to go to like 50 million market share of users. So this is a great company to be buying. And if we take a look at their revenue, which is projected this year to be $196 million, guys, do the math on 2 billion to 200 million. This is trading at 10 times sales. Look at these SPAC stocks. They're giving you opportunity. They're not ripping you off like these IPOs, guys. And this company has great growth. It has nearly 30% growth right now. So this is trading at 10 times sales. SoFi, 13 times sales. Those other companies, 50, 60, 70, 80 times sales. This is that dot-com bubble, and this is what, some of these hedge funds are holding. They're holding these IPO stocks, and, Morgan Stanley expects a S&P 5 correction, and the thing is, a lot of retail traders are not holding these stocks right now. So I want to show you guys opportunity, and I'll show you another one real quick. Open Door. This is a real estate, iBuying company. This has continued to sell off. I own a lot of this one as well. I own all three of those SPAC stocks that I'm telling you about right now. This is trading at under a 10 billion market cap right now. And guys, this company is projected to do, $10 billion in revenue next year. Profitability is going to be coming down the road. As far as valuation, that's one-time sales you're paying for. One-time sales for next year's revenue, guys. Are you willing to pay one-time sales? That is absolutely ridiculous that this company is still selling off. And this does not have a lot of market coverage right now, but the analysts that are covering this stock, they do have open door, 50% upside, SoFi 50% upside. So they are given reasonable price targets right now. There's just not a lot of coverage. So I just want to show you guys what's going on in this market right now. There's a lot of fear in the market, a lot of scare tactics, and most likely if you're purchasing these SPAC stocks, you are going to have to hold these companies for a while because there could be no movement for years to come. This happened with a lot of other companies in the past. It just breaks out before you know it out of nowhere. So this is what's going on in the market right now. I want you guys to see the manipulation on these IPOs. It just makes me sick. I don't want to touch them. It's just they're greedy when they go to market at these valuations. They're greedy. They try to run them up so high and get retail to, keep the stocks moving. It's just a load of garbage. Look at these SPAC stocks. These are companies that are going to the market, giving retail traders a very reasonable, valuation. And this is just what's going on in the market right now, guys. Be sure to take a look at my other videos, guys. There's a lot of other videos covering these stocks. I got SoFi right here, EightPoint, Open Door. All of these stocks are covered inside of my channel. I'm going to be going really hard in this channel in the next couple of months. So be sure to subscribe to the channel if you felt any of this information gave you any better insight. I will be keeping you guys updated with all the growth stocks and spec plays in the future. And I really hope you have a great day, and I hope you enjoyed the video.